yourself by becoming rich.
Take all your money, buy Bitcoin.
You can wake up every morning and say GM.
GM. GM. So, as I nearly break my chair, GM to that. Alright. Sunday. What are we looking at here? Okay. So, pretty good weekend from the perspective of no continuation immediately to the downside. Probably leads to some sort of push higher into this gap. 55.5 potentially, and then possibly pushing even higher to squeeze. Depends. I wouldn't class this, I mean it's definitely not bullish yet, and best thing to do would still be wait for some kind of retest, but it does seem like the market is starting to fill this gap. You can see here. So it moved down. Let me get a fresh chart. And so market broke down and has started to move into this gap and spend some time trading in it. So this area here. And as we've started to fill it, as long as price stays above this 54.4 area, the full gap will probably fill. So you might see a rejection of it initially, but as we get back inside, we probably move through it. Now from there, it might roll over and do that, just fill the gap and go down. It might squeeze higher. I think the main thing, without getting too over involved in what's happening on a weekend, I think with Friday's move, the markets probably went too bearish too quickly, or at least gotten a little bit overly bearish. So I see potentially upside as more likely. I would still treat it as a short-term thing, rather than any kind of sign of major trend shift. I mean, there's a lot of work needs to be done before this becomes in any way bullish again. But I think the downside risks are always there, but you're going to have to see us touching off stops above. So if I go even to a lower time frame, I think the way this market's going to move is probably, unless there is some change, it's probably going to keep grinding and taking out any of these stops that are getting set. So it's setting some up there. So it probably chops around for a while, then takes that out, and then probably chops around again, then takes that out. And if it's going to be bearish, it's probably going to roll over something like that, where it's going to fill most of this gap, and it's going to frustrate people who keep trying to reshort it and reshort it and then reshort it, and then eventually, if it is going to go lower or back to the lows for a retest, it'll do something like that. That's roughly what I'm thinking at the moment. Next week, coming up, we have, let me take this off. I was playing around with that filter. Where am I? Oh, there we go. There we go. So, should have CPI next week, yeah? Yeah. Wednesday is the CPI inflation. Thursday is PPI and unemployment claims. And Friday, not much. So, big week from the inflation perspective. That will definitely move the market. It always does. Generally, though, or not generally, sorry, recently, the market has not been as concerned about inflation and has been much more concerned about the unemployment rate and the non-farm payrolls. So I'd be looking at it as less important. The jobs data on Friday was much more impactful. But inflation, especially if it surprises, will have some kind of movement. And then at that point, once we get into next week, we are getting ever closer to the Fed meeting, which is the following week, the 18th. and the first rate cut. And that's the big one. That's what the whole market's going to be waiting on. So I think as we get towards that, we probably see the market slow down a bit in the days leading up to it. But if you remember a while back, I said we would go lower, or my expectation was that we would go lower, and then we would rally in to the Fed meeting, to the FOMC, to the rate cut. So that's over here on the 18th. So here we have it. That's the Fed FOMC rate cut meeting. And above, there's plenty of areas to touch. You've got liquidity levels above, just taking these major highs that are very obvious on the chart. You've got some untested breakdown points. You've got an untested bearish order block over there. And I wouldn't be surprised to see some kind of a strong rally. Now, I'm trying to, and I'll do this on weekly outlook, I'm trying to kind of figure out consensus. Obviously, the market is quite bearish at the moment, driven by price, of course, and a bit of a uncertainty around what's happening, a bit of dissatisfaction with the price action. A lot of people are obviously badly positioned and all that. But what I'm trying to figure out is going into the rate cut, which I do think people are hanging their hopes and sort of betting on the rate cut being bullish. I do think that's definitely something that we're seeing. But leading into it, are we going to see a rally? I think if we do see a rally, you're going to see people probably de-risk into it. So this whole talk about are rate cuts bullish, are rate cuts bearish, again, you can't say until after the fact. That's the only time we're going to find out. So what you're trying to do is just trade. And as I look at it, we've had a significant decline. We had an overextension at the lows. And that definitely does set up the potential, at least, for a move higher. Whether it's just going to be a small squeeze, whether it's going to be something bigger, whether it's going to lead to a trend shift, I don't know. But I would probably lean, especially the closer we get towards the rate cut, I would lean towards the odds of a rally being higher. Now maybe this starts to move and look good, and people start to bet on this rate cut rally, and then we get one last flush, and then we get the actual rate cut rally, and then whatever happens after that, I don't know. I also like the idea of this, right? So all of this to me points towards us going up a little bit more, at least, whether we're bullish or not. I think we go up a little bit more. At that point, you want to be watching out for potential for a flush down. And I think if we take those lows and come back inside, that's probably your best long going into rate cuts. I think that's, obviously if we avoid crashing lower, I think that's probably what I would look at. And we'll see, obviously, as it goes along, we'll see how that all pans out. But that would be my current view. And so I think that if we stay above today's daily open, which is just there, I think we can move towards this gap. Will it squeeze up into it today all in one go? Possibly. There's a little bit of positioning building. If you go over here and look at, kind of zoomed out over the weekend, we had a squeeze up throughout Friday going into Saturday. We had a sell-off. We had some of the decline off the open interest, but now it's starting to build again. As price is kind of trying to build its way back up through the range, we're seeing a little bit of open interest increase. Nothing major really. Zoomed out, higher time frame perspective. We still have a really big build-up of open interest from all the way down. So pretty much all of the decline down, but especially from here, especially from back on the 4th, we've seen a pretty sharp increase in open interest, some of which has been squeezed out, but I think there's more to go. I think that the positioning building up, if we clear this level here, if we clear 54.8, it probably flips back in favor of bulls temporarily and leaves a decent bit of build up. So we've got 171 to 183, so it's 12,000, which is about 600-700 million of positioning build up, which of course we're in a downtrend. So the first thing you always want to remember, the primary trend is down. And so your expectation is any of these areas that reject, if price rejects off any of these moves and comes back below and gets back below this level here, well, then you're looking at new lows. And from there, of course, like I said on this other chart, you're looking at, does it reverse and hold? It's funny because the market's in a bearish state. The market keeps going down. Bounces keep getting sold into. There's no real signs of a bullish shift. And yet the temptation is always to look for longs. That's still what I see in the market. It's like, oh, well, it's almost like just not hoping, but expecting. It can't go down more. It can't go down more. It has to bounce. It has to bounce. It has to bounce. It has to bottom. Well, it doesn't really have to. The rallies can keep failing until they don't. And so while I'm tentatively sort of expecting a potential rate cut rally, I'm trying to figure out, is that really a consensus view already? Like, are people already thinking of that and betting on that? If they are, then I think we won't get one, or at least we'll not get it until we go one leg lower and we go back down and sweep out whoever's getting long here based on Friday's low. It's hard to read too much into the weekend because that's all it is, just a weekend. And the area I think we should revisit, but then of course we might not. But typically, I think we should revisit Friday's close. That's common, which is over here at 53,511. That's Friday's New York close, which I should have on this chart as well. Let me get it over here. Friday's New York close at this point was here. Usually, you'll come back to that area some point either on Sunday or early in the next week. And so, I don't trust the weekend price action. You never should. I also don't really trust this Saturday high. It doesn't seem very strong. Like, I don't know. Are people who've shorted in here, is that a safe spot for stops? Not particularly. If we do come back up and sweep that level, these wicks are what I'd be watching, right? Do we get towards that gap? The gap is above here. It's above this 55.2. If we move up and we stay within that area, that's an area for rejection. But in terms of shorts, you have to be very selective because it's really easy to be bearish. It's quite obvious that we're going down. And so, short setups are not just going to be simple at this point. So you're in this kind of weird position. The trend is down. The trend is more likely to go down. That's the way it's been moving. But you also have gaps above, and shorts can just keep getting squeezed. So I think that's a lot of what's happening here is, when you look at the daily candles, we're having like 2 green days so far. And it's not exactly a massive sign of strength, but it does show that this continuation kind of selling into the weekend has failed for now, and we could go higher first. And we can go a lot higher. I mean, you've seen a bunch of these squeezes. There's been plenty of squeezes throughout this range just to clear out positioning. From a technical perspective, Bitcoin can squeeze all the way to 63 almost and not even break a new high. So, keep that in mind. But that also doesn't make it a green light for easy shorts or just to get free money on the downside or anything like that. Let me pull out some of these altcoins. How are they looking? Yeah, so they look like they're building consolidations just to flush again. But again, this is just how it looks. This is not how it's going to go necessarily. Many of them are weakening. Again, they always look weak before they have strong bounces. I mean, ETH is very weak, but ETH has actually come back into its wick level, which is an area. I mean, the last time it was here, it produced a nice bounce, so you can absolutely see another bounce again from that point. Sol probably continues to hang around at that 121 or 125 area, sorry. Yeah. Look, I think there's unfortunately you're in one of these places where it can go up or go down. So the trend would say down is more likely, but you've got plenty of room to squeeze up either, so you're just gonna have to play it as it comes. I don't think a huge amount's going to happen today. You'll have the usual probably Sunday volatility towards the end of the day. Then we will get Monday, Tuesday, Wednesday is probably when you're going to see the main movements this week. And I think after that, once we get towards Thursday, Friday, and especially into next weekend. I think the market's really going to quiet. It's going to cool off and consolidate, and traders will look ahead to the Fed rate cut, and the closer we get to that, the more volatility will die, as everyone's waiting to see what happens. We all know it's going to be a cut. We're going to see what the market reaction is. So September, historically a bad month. We're obviously red at the moment in September, and we'll see how that goes. I'm not convinced that this thing is just going to go straight down. I am getting ever more convinced, of course, that this is, a failed breakout at the highs, and we could go quite a bit lower. But a lot of it's going to depend on what the reaction is to the rate cuts, which is the 18th. We're now on the 8th, so we've got 10 days. Is it the 8th? It is the 8th, isn't it? Yeah. So that's really it. I don't see too much need to read a lot more into this price action beyond what we've already seen, and we'll see how it all goes as we head towards today's session and going into the weekend, or not the weekend, sorry, going into next week. And that's it. GMGM. Today we'll have weekly outlook. It'll be slightly later. It won't be 4 p.m. UTC. It'll probably be 6 or 7. See you then.